Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CHIFENG Gold interim report. CHIFENG Gold Mining Co., Limited, offers a diverse range of businesses and services, including mining of gold, metallurgical processing of gold, sales of gold, worldwide exploration of zinc, lead, copper, and molybdenum, deposits, dismantling of e-waste, recycling of power batteries. The skyrocketing CHIFENG Gold stock price. A perfect storm of company-specific performance and favorable market conditions, CHIFENG Gold stock price has experienced a staggering 115.96% increase in the past year, driven by a combination of exceptional company-specific performance and a highly favorable global gold market. The company's robust financial results, strategic developments, and the soaring gold prices have all contributed to its remarkable surge. On the company-specific front, CHIFENG Gold reported impressive revenue growth of 24.99% year-on-year, with net profit attributable to shareholders surging by 119.46%. The successful listing on the Hong Kong Stock Exchange in 2025 and the granting of new mining licenses have also boosted investor confidence. Furthermore, plans to increase annual mining capacity at its Wulong Gold Mine and Jilong Gold Mine indicate significant operational growth. The global gold market has been equally favorable, with soaring gold prices reaching new highs and trading approximately 44% higher than a year ago. Geopolitical tensions, central bank gold purchases, monetary policy shifts, and strong demand from China have all contributed to the sustained demand for gold, supporting its price rally. As a result, CHIFENG Gold stock price has skyrocketed, making it one of the top performers in the sector. The primary drivers of revenue growth or decline for the company can be summarized into several key factors. Revenue growth is primarily driven by an increase in gold selling price, investment in research and development, listing on the Hong Kong Stock Exchange, and increased production volumes of copper cathode and concentrate powder. Additionally, revenue from gold sales saw a significant increase of 44.65%, while metal streaming arrangements and advances from goods sales also contributed to growth. On the other hand, revenue decline is largely attributed to decreases in gold production volume, zinc and molybdenum, concentrate powder production volumes, and domestic mining revenue in mainland China. The company's silver sales revenue also saw a substantial decline of 99.98%. Net income and profit margins experienced significant fluctuations between 2024 and 2025. Initially, net income increased by 55.79% in 2025, with a notable rise of RMB 491,601,280.36, 62.5% from the previous year. However, this trend reversed in 2025, with a decrease of -37% compared to 2024. Profit margins also underwent changes, with overall gross profit margin increasing from 39.5% to 48.1%. Operating profit margin rose from 28.2% in 2024 to 35.3% in 2025, while principal operations profit margins increased from 61.3% to 64.6%. The primary drivers of these changes were the year-on-year increase in gold prices, 24.31% and 24.5% in London and Shanghai respectively, and effective cost control measures. Additionally, gold leasing transactions helped reduce the risk of profitability fluctuation. The company's financial performance indicates a strong trend of generating positive operating cash flow. The net cash flow from operating activities has increased by 12.39% to RM 0.613 billion, as stated on page 8. Furthermore, the company's cash and bank balances have seen an impressive increase of 86.55% to RMB 5.125 trillion, page 23. Additionally, key subsidiaries LXML, GSR, and Xinheng Mining have also reported positive operating cash flow, page 167. These indicators collectively demonstrate a healthy financial position for the company. Management's outlook and strategy. The company is optimistic about its future growth potential, driven by several key strategies. Firstly, it aims to capitalize on favorable gold prices and intensify cost reduction efforts to boost profitability. Additionally, the company plans to invest in resource exploration and development, both internally through exploration at existing mines and externally through mergers and acquisitions. A key focus area is the Sepon Gold Copper Mine, which has substantial potential for future growth. The company aims to drive rapid expansion through internal exploration and external deals. Furthermore, management emphasizes the importance of sustainable long-term development, prioritizing high-efficiency operations and coordinated resource allocation to navigate cyclical fluctuations and geopolitical risks. The acquisition of China Investment Mining, Laos, Seoul Co., Limited, is a strategic move to tap into quality rare earth resources, underscoring the company's commitment to diversifying its portfolio and securing future growth opportunities. Overall, management's outlook is one of cautious optimism, with a focus on driving growth through strategic investments and operational efficiency. The company has a history of paying dividends to its shareholders. This is evident from various sections of the financial summary, including cash payments for dividend distribution on page 61 and the explicit mention of dividends paid. Yes, on page 68. Additionally, pages 69 and 132 confirm that dividends are payable in 2024 and 2025, respectively. The company's commitment to shareholder returns is further emphasized by the statement on page 142, which explicitly states that the company has indeed paid dividends. Concerns about inventory buildup and supply chain disruption exist. The company's financial summary highlights concerns regarding inventory buildup and potential supply chain disruption. The data suggests that the company has a significant amount of raw materials and finished goods in its inventory, which may indicate inefficiencies in inventory management. Notably, the provision for decline in value of inventories made is substantial, with 19.37% of raw materials already accounted for as potentially worthless. This, combined with the increase in raw materials inventory by 4.5%, raises concerns about the company's ability to manage its supply chain effectively. Furthermore, structural constraints such as inadequate investment in new mine development and limited supply elasticity may exacerbate these issues, leading to potential disruptions in the supply chain. Overall, these findings suggest that the company needs to address its inventory buildup and supply chain management to mitigate these risks. That concludes the financial summary for CHIFENG Gold. Feel free to comment below, and I will be happy to answer them when possible.